here, 0.5% instead of 0.3% for the month. It's kind of that concern level for the market is if inflation comes in a little hot, is that a sign that we need to start adjusting some of the federal open market committee's decision process? So naturally, we are seeing a little bit of a pullback today. The response by the market to it, if there is a fight by the bull to come in and say, now that it's known, I'm willing to buy again, that's going to set up our bull case. Bear case, of course, is if that flight leads to greater liquidation and pushes us below some of the recent lows. So we've been coiling, we've been shopping. I think we all know that. What happens now that the information is known is going to be the key. Oftentimes we get a, prepare for the news and then fade the news. And if we fade the news, i.e. buy back the market towards, down 0.5% or 0.25% today, I think the bull is going to start to get some general confidence. If it continues and we end up with like a down 2% day, something like that, then the bulls may start to panic. We may see a spike in the VIX and we're allowed to rinse repeat on this sort of weekly sell-off event that who knows if and when that sell-off event is going to lead to liquidation, like true liquidation, or if it's just going to be another buying opportunity as it has been with DeepSeek, with tariffs, with everything along the way. So at the same point, I got to look for probability of success and return on capital. My concern right now is to try to find that high probability of success. I'm still not looking for the bull case, okay? So I have to determine for myself, are we going into a bear scenario where I want to lose? Or am I thinking on the contrary to that this is going to be another dip buying opportunity? And as we test some technical levels, can I look for that put credit spread or the in-the-money call debit spread that can generate some income, generate some return for the short-term holding period, playing off of no continuation to the downside? I think that, like I've sort of said, is that first hour or two of today, I think will give us a lot of information on that. If we start to see follow through to the downside after the open, then I've got to be looking more for the bear case. If we are looking at bounce back after the open, then I can start looking for that anti-bearish case back to the chop zone. Anti-bearish is going to be lower return on capital. Right now, the probability of success isn't there to do it. If that probability of success returns, then that becomes that low return on capital, high probability of success. Downside has high potential return on capital, but we don't know for sure where the probability of success lives. This is the key input that I'm focusing right now. What's the probability of success play? So let's see, no trend change because there is no trend still. We'll see if that shifts. Maybe we get a bear trend out of this. Maybe we actually get the bullish breakout out of this, like I mentioned. We'll see. Seems unlikely that we get the bull breakout. Low inflation would have been a much more bullish scenario, of course, but got to trade around it. We've touched on allowing more time, allowing more space, etc. For a directional play, I like allowing more time, but with the VIX likely to be a little bit elevated today, that may be a little harder to do, although the VIX should continue to rise if we do go into liquidation mode. Earnings dates, always crucial. We had a couple of interesting ones last night after the close. Lyft and Gilead really played off pretty close to the target prices. SMCI underperformed after the mega rally that we had for 3 or 4 days ahead of earnings. I'll look at that again for a potential pin type play for this week. And then we've got a number of interesting, sort of mid-level company, it's not the Apples, the Amazons, the Metas, the Alphabets, the big tech names, but we got, Robinhood, Reddit, APP, TT, the Trade Desk, Cisco, Datadog, potential names out of the earnings cycle for tonight and tomorrow morning that could be interesting plays, as long as that open interest lines up along with some good technical and traditional earnings moves. So we'll take a look at some of those earnings names and think about how those can trade. I think a big key today, though, honestly, is avoiding that revenge trade. So if I'm bullish coming into this morning, I don't necessarily have the input that I need to trade to buy the dip yet. So if I was heavily allocated on the bull side, for example, The natural instinct can be to say, gosh, I got to recover some capital on the bull side. My portfolio really only pays off on the bull side. I want to load up more on the bull side now the prices are lower. I'm not there yet. Like I said, I've been bullish, but not overly bullish, not hyper aggressively bullish. I am on the bull side of on my trades. That doesn't mean that right now I'm looking to pile into the market. Rather, I would have actually liked to see a rally today to add to that winner rather than a dip to fight against a currently losing setup. I'm waiting for clarity in the signals to say that I can go bullish, or I need to flip bearish by having some cash on the sideline that I can now allocate, or cutting a couple of bull trades and switching them to bearish. End of the day, I may end up with a more bearish looking portfolio on the whole. I may end up closer to neutral, or I may end up more bullish than I was yesterday, and it's all going to be based on the charts and what the market behavior is. So I got to let the bullish, and I want that wild, volatile look if I'm going to go bearish. Not calling the bottom. Those go hand in hand. This bottom may be done, or it may not be. Again, I'm letting the market dictate where that bottom is by watching for signs of that bottoming process. If we get bounce back, if we get money allocated to bull plays. There's one trade that I do want to focus on today, given some of the shift. Yes, there's inflation. Usually when people say, oh, there's inflation, they want to go out and buy precious metals. But with the currency shifts that occurred, we actually may be in a spot where the presence of inflation actually leads to the pullback in precious metals. So the expectation of inflation causes the rally. The presence of inflation means policy shift, which is actually bearish for precious metals. I'm going to walk through gold in particular on that. Silver is up a little bit today. Gold's down a little bit. It's not a huge move, but the dollar yen having a pretty big move today. One of the biggest moves in terms of standard deviations of any of the ETFs that I watch for the pre-market stuff. Okay. So you got to watch for that. Look for maybe that's a way to play options, or individual equities may not be as clear. Start looking at some other less correlated asset classes that have a clearer picture, whether it's a commodity name, a bond type trade, something like that can actually be a little bit clearer. So I do want to note that, and we'll touch on gold this morning. All right. It's not beta to the market that way. That's about it. 10-year yield, 4.65, now 4.64. Today we moved to 4.64, a big spike, 0.11, 2.5%, call it, in the 10-year yield. We're getting into that inflationary concern level. If we reject 4.64 and go back to, say, 4.58, I think the market starts to get a lot more comfortable. But if we push through and go to, say, 4.7, 4.73, 4.75, whatever that number is, and start towing towards 4.8, then people start talking about 5%. People start talking about concern for real liquidation, real inflation hitting the market, and what the net impact can be. Bitcoin, again, a risk-on proxy, particularly for tech, down 1.5% today, below the lows of the last week, or even 90,000. So another one for me to watch. If Bitcoin continues to pull back, that can also be a bearish indicator for gold and silver, people looking for dollar alternatives. If Bitcoin is falling and the dollar is strong, we may be looking for more precious metals bearish as the sort of easiest to see type trade. The dollar on the whole only up a little bit, not a lot there. That's what it is, but it is up again. Using this 50-day moving average, it seems, as a support level. We've tested below it a couple of times, but really haven't been able to break down. And again, today, dollar a little bit strong. And I don't think this will be updated because we're not past 9:30. And I also have a 15-minute delay. But just to note that MMFI, the number of versus below, is right at this midpoint. So we're at a very neutral state in the market, seen from the chop. All right. So let's see here. 3 seconds to the open. Not bad on the timing. S&P down 1%. If I were to look at this chart independently of anything, it just looks like chop, right? 1% down doesn't necessarily tell me anything. We're not testing the tariff lows. We're not testing the deep seek lows. We're not testing any real major lows. We're testing the 50-day moving average. Market doesn't look too weak right now, but if we get down towards 595, or really for me 590, I can or I will start to get much more concerned, and that is within striking range today. So $4 more, 0.8 more percent, 1.8% in the S&P would certainly be a bearish looking input if that doesn't hold. 590 is big, 585 is big. We've got so many support levels below the market that if they start to break, maybe we do start to see something real on the liquidation side. But there's so many support levels that it's hard to see us just going straight line down. Down seems like it's got a lot of work to push through that. VIX is only 17%. It's elevated, but not crazy. Bullish inflation numbers, low inflation numbers would have, I think, pushed us down towards 14%. Honestly, with a higher inflation, I was kind of expecting to see more like a 19 VIX with the market down a little bit more. So maybe that is also a sign that the market was okay expecting some of this inflation, had pre-hedged it. We had seen yesterday SKUDEX up a little bit. It spiked on the open and already starting to fade. People look like they were either selling put spreads or putting on that hedge with a risk reversal, selling out of the money calls, buying out of the money puts, preparing for the potential downside here. And if they are prepared for the news, oftentimes that news can be a little bit more of a muted response. Tech down a little bit more, 1.1%, but pretty in line with S&Ps. So 1.05% for SPY, now 1.05% for tech. Very in line. Chart looks almost identical for the last, call it 3 weeks. DeepSeek was a little worse for tech than tariffs when compared to the broad market. But generally, we got a lot of support levels below the market. And SMH pulling back about 2%. This is pretty much in line with the expectation to trade about the same number of standard deviations in the expected move. So when tech is down 1%, I expect to see SMH down about 1.8%. It's down 1.9%, kind of hand in hand, right in line. Back to the 200-day moving average, nothing outlierish on that, but I should note NVIDIA back down to 130. And this could be an interesting trade for the anti-bearish trade if the market does start to bounce back. Because we're starting to set up that potential after the rally of the last couple of days for NVIDIA to trade between maybe 130 and 150, maybe to the downside 127 or 128. And right now we're towing against 130. There's potential for return on capital from an anti-bearish trade if the market gains its footing. So we're not selling everything yet, right? I mean, Apple only down almost nothing after a nice bullish day yesterday. Pretty unchanged. We are seeing some selling, but we're not seeing selling everywhere. Heck, Delta Airlines up a little bit today. FXI, China, up a little bit today. So there are some selective buys going out there into this marketplace. It's not all dire yet. Heck, even AT&T that we were talking yesterday at the close, that's up a couple cents today, now a penny. So again, we're not in sell everything mode. It's not throw the baby out with the bathwater yet. Do we have to have the baby thrown out with the bathwater? Not in the current environment, not in the current technical environment. If we do, that could set up the ultimate low. But as it currently stands, I see a little bit of fight here in the market with some buying happening in spite of the overall seemingly bearish input. Gold unchanged now, by the way. IWM. So that got hit the most, down about 1.7% on the open, now down about 1.45%. It's been the underperformer. Can't get above the 250-day moving average with any conviction. Can't get above 230 with any conviction. Now we're $8 away, $7.50 away from that key breakout point. It's got a lot of room to run before it starts to test it again. We need a bullish input to do that, and it just doesn't seem like that's in the cards right now. So it seems like overall the market still has some capped upside, and the question is whether we're going to keep the cap on the downside. Financials finally as a potential indicator for small caps, weak but not too bad today. Again, down less than 0.75%, about 2/3%. KRE yesterday was looking a little bit better than financials. today looking a little bit worse than financials, down 1.5%. All in all, this is a pretty, honestly, it's kind of a blasé response to a higher inflation number. If this had come out like, a couple months ago when inflation wasn't as widely speculated to be a potential trigger for downside and people hadn't been prepared for it, like we saw on December 18th with the FOMC announcement that they were worried about inflation, this prepared the market for a scenario with high inflation. And so the market got ready for it, hedged ahead of it. Doesn't seem to be worried about it as much as maybe they would have been, a couple months ago. So all in all, kind of back to what we've been doing, chopping. Let's start up with some aggressive power trader names, and then we'll go through some individual names. As always, guys, if you have questions about individual stocks that you're looking at, throw them out there in the chat box. We'll talk through them in addition to the stuff that I've started off with looking at for today. McDonald's, good earnings, holding near the highs, hanging on today, 309. I'm reluctant to go crazy with McDonald's right now. I think above yesterday's high starts to get exciting, or if it sets up a bull flag, pull back towards 300, then start to show higher high and higher low on the following trading day. For now, I'm not looking to get aggressive there. PFG, keep wanting to do PGF, broke out above the 100-day moving average, holding above that. Looks okay, but should have some resistance around 88. And then AT&T is the one that I actually like the best. We did make a new high this morning before pulling back a little bit. The previous high was January 29th, 24.98. We're still holding above that. So, yesterday near the close, I was talking about these 26 calls for a quarter. They were, I think, 25 at 26 or 26 at 27. They're effectively unchanged today. Implied volatility up slightly because of the broad market implied volatility up. I still think this is a potential play out there, looking at AT&T upside with the breakout and the hold down only 0.25% today. Seems like nobody really wants to get aggressive selling AT&T. So I like AT&T. I like out of the money options with this because the implied volatility is near the lows. 17% is about as low as it gets in AT&T. Realized volatility has been 17% post earnings. Post earnings, there we go. 24% including the earnings, but the long-term realized volatility is in the low 20s. During this slow period post earnings with a grind higher, it's been 17%. So I think this is an interesting potential opportunity here, and I do like AT&T upside as the best of the aggressive power traders for me and what I'm looking to do here today. Okay, see their PLTR, Tesla, NEM. Okay, so my concern with NEM, and then I'll come back to the tech names, is back to dollar yen. All right, so let's do that first. We'll go commodities. So dollar yen had a nice bull run here in October, November, September. And then it started to chop and pull back, and gold rallied. And generally speaking, when dollar yen is strong, gold tends to be weak. Silver tend to be weak. And we're seeing this spike back today, showing a bottoming action, getting back to the 20-day moving average, not quite through the 50-day moving average. If dollar yen continues to have this bull run, dollar strong, I start to worry about gold downside. Gold is extremely overbought here at 70 RSI. I don't often see it hold above a 70 RSI for long. We've had a few times here, and then we consolidated, minor dip. Got up to that high level above 70 before major liquidation in November. Note that when we talked inflation the last time for the Fed on December 18th, gold actually sold off, and then people started to buy after the fact. We've now been running up for the better part of 2 months. We're at a 74 RSI, dollar yen strong. This could be a time where gold starts to roll over. Maybe some support at 260. I think the real support is going to be down at 258, $9 down. And I look out towards, some maybe put spreads in gold, like a 263, 258 for $1.40. thinking about that potential for gold to pull back. Silver is bullish today, but it's been such an underperformer to gold, and FXI is bullish, so there's a little bit natural buying of silver, selling of gold today. The bull case for precious metals to me is in silver. The bear case is in gold. There's a catch-up trade for silver, especially. Now, to the gold miners themselves, they do tend to trade more in line with silver, and they've outperformed silver, traded a little bit more somewhere in between. And NEM is the biggest holding of GDX as well as XME. It's kind of at a question mark point here. It's been an underperformer. It has rallied back. It is above the 100-day moving average. It's above the 200-day moving average. If gold finds support, if dollar yen starts to weaken after the initial bounce, then I wonder about NEM towards 52. So I want to look for this throughout the day of a potential for NEM. Their earnings are in a week, and the earnings are about a 5% move on average. We had a huge downside move in October, a good upside move in April. So I have to think of that in terms of, this is normally not a huge mover on earnings, but in the last year, we've had some big moves. Historically, we're looking like 2-3%. We've had a couple of big outliers in there, and particularly over the last year and a half, starting here in the, July of 23 was one of our first real big moves. We did have the big move in 22. I don't know if I see a trade in NEM right now because of the earnings coming up next week. I don't want to trade an option for 2 days. I don't want to bet on technicals when we've got the input of the fundamentals next week. I'd probably be more inclined to go to GDX and look at the broad gold miners. When we had the October 24th sell-off in NEM, GDX was a much more muted response, but it did set up a bear trend for, the better part of a month. Could be a wait and see in NEM, to be perfectly honest there, Fred. I think that we're going to have to wait on that. They haven't kept up with the price of gold, like you mentioned. Neither is silver. KGC, let's see when their earnings are today after the close. So KGC has been an outperformer. They've got earnings today after the close. Their earnings are normally about 3%. We don't, for some reason, the implied volatility, the average implied is not populating today, but a 3% mover, that's only 35 cents. Downside puts us to 1140. That's nothing, or even higher, 1160. It's sort of in this range. It's not much. On the upside, puts us back to the highs. Maybe we let KGC have their earnings this afternoon and then start thinking about gold miners. I think sticking with the commodities themselves makes a little bit more sense because we are getting an elevated implied volatility in the miners because of the earnings coming up. Gold, implied volatility at 16% is not cheap. 13% is kind of the norm. And I'm personally thinking more on the bear side of the precious metals right now. So I think that puts spread type trade back down is my current lean. And that, again, could shift very easily during the day. If the market starts to bounce back, dollar yen starts to weaken. If we see FXY strong, that's our ETF that trades dollar yen. If I see this bounce back towards 60-20, give me back about half to 2/3 of the move, then I go back for SLV instead, and I think about the gold miners maybe next week. AG. You could, so like the correlation between AG and SLV prices clearly hasn't been there. But if people get excited about everything precious metals and gold stays near the highs and silver starts to catch up, people will likely start to shift their thinking away from the commodity and into the individual names. It's kind of the same idea to me as like when people start looking at the regional banks after the big banks. It's sort of the secondary thought or the back, the afterthought of metals bull case. If the precious metals have started to run, looking for value within some of these other individual precious metals name. I mean, obviously KGC is very bullish on the whole. NEM, maybe if it's going to have catch up on earnings, looks for an outlier move to the upside if gold continues to be bullish. Yeah, I mean, like I said, I still think sticking with gold, sticking with silver makes a little bit more sense for now. But in the coming days, that may shift. My thinking on that may shift a little bit more. Let's go to PLTR. So PLTR, it's perma bull, right? I mean, it's hard to ever fight against PLTR. The dip that happened at the beginning of the year got bought back up, had amazing earnings, followed through. Starting to show support here. Looks around the 107 level. Not enough premium to do anything for this week. Only a quarter for the 107, 105 put credit spread. Bull case certainly kicks in above yesterday's high, the all-time high made yesterday. For the outright bull, implied volatility is high, price is high. I am right now in PLTR kind of mode. Above the high, maybe there's something. If we dip and the market is holding up okay, I start looking anti-bearish. As we currently stand, anti-bearish makes the most sense to me. But the premium isn't quite there, and we're not close enough to those technical levels to really get a good put credit spread for Tesla. Still looking for support. Maybe we found it today. Today finally showing an up day, but it's an inside day. We're above yesterday's low. We didn't go above yesterday's high. We're towing around this 100-day moving average. I was looking at 310 as a good support level. Again, that's a long way down for an anti-bearish trade for the bounce back. This week's 310, 307.5 put credit spread's only 13 cents. Or, maybe 15 cents. There's not much to it. So, again, it's another name that just isn't quite giving me the return I'm looking for anti-bearish, and I don't want to go bullish until I see a sign that the bottom is really in. Maybe by Friday I can start to look bullish in Tesla, but not a spot that I want to get aggressive. Again, I'm not calling the bottom, but I'm not calling for follow through myself right now either. But it is nice to see some buying start to show up in the market. Maybe this liquidation event is over for now. And I want to find a way to get into this, maybe looking 330 or 327.5 as my support level if we hold through today and start to show more support tomorrow. So then next week, I start looking at a put credit spread in Tesla. But for today, for tomorrow, for Monday, or for Friday, maybe even, I just don't know that I see much here. Let me go Dow. So this is one that I've been doing the 64-66 put credit spread. This week it was starting to look a little bit too weak, and we had the inflation number, but now seeing it bounce back. I do like Delta staying above the 50-day moving average, but I do think that there's probably a little bit more to United Airlines. It's not quite as bullish as Dow in the in the recent behavior from like late January, but the support seems a little bit clearer here, and the return on it looks pretty good too. For staying above 102 in gold and United Airlines, the put credit spread here, 100, 100 even, is about 35-cent credit. For Delta, the comparable support level type trade would be staying above 64. And you can see the 64-62 put credit spread. Cents Delta, it's about a quarter. A little bit better return on cap trade for the anti-bearish thesis. I'm looking at United Airlines, and that may be one of the possibilities for me for today, because I'm only looking to hold that for 48 hours, a little bit longer, right? Stay above 102 for the next 48 hours, and I'm out. Collect 35 cents now, closed out for around a nickel. I can make $30 in 2 days on $1.70 or $1.65 of risk. That is not a bad R&R for a 48-hour hold. So if I risk $1.60 or $1.65, if I pay $1.65 and sell for $1.95 on the call debit spread, it's about just under 20% in 48 hours. And that seems a little bit better to me than Delta, paying $1.75 to sell it at $1.95, only about a 12% return. So, you know, I like the airlines. They don't show major signs of liquidation. They don't seem to have nearly the downside risk of, say, you know, tech names that have been a little bit more volatile, like Tesla. They've been steady Eddie, staying above those support levels looks potentially attractive there. So just a note there, I don't have a problem with Delta, but I think United might be that trade. All right. So that is that. I had three others that I was looking at in terms of a put credit spread yesterday, and now I should touch on them today. Amazon staying above the support levels. I was looking at 227.5, 225 potentially. That's, again, you know, about a 55-cent credit here right now for the 227.5, 225. You know, we're not far from it, but we're only down 1.2%. And I should note here, now that we're 22 minutes into the day, tech's only down less than 0.5%. S&P's down 0.6%. Small caps down 1.2%. We're getting the buyback. So the market is reacting again, kind of anti-bearish. Buy the dip. Minor dip, buy it back up. Let's see how this handles. So Amazon's starting to set up okay. Wayfair very much looks like 42 should hold as support. And they're very, you know, in many ways very related. Again, 35-cent credit here, very similar to United Airlines in the $2 wide put. Fair, United, Amazon, all look pretty good for the anti-bearish trade. And then Mondelez, this is not the anti-bearish trade. This is that potential upside trade towards 65. Implied volatility options are generally cheap. The 60 calls are about $1.90. I'm thinking about this in terms of a potential bull play, just buying an outright March 60 call. If we get a move similar to yesterday where we were up about, what was the close to close? Almost $2 yesterday. If we get that follow through, hold above the 50-day moving average today, play for that next upside move, that could be an interesting leverage play. So I still like those three names, as well as United that I touched on yesterday as potential trades. Three of them anti-bearish, Mondelez potentially bullish towards 65. BBAI, another AI name. I actually haven't looked at this one before. So maybe in the early stages, $1.50 stock, now an $8 stock, you know, kind of a wild one. I doubt the options are liquid they're pretty liquid. Nickel wide is not bad for her, a stock that's kind of doing this potential parabolic move. So we got the parabolic upside, the pullback. Tomorrow, I think, more likely to be the interesting day than today. If tomorrow sets up the bull flag with a higher low and a higher high, then I start looking at 9.5 or higher for BBAI. But today, it's more about just, as long as it holds today's low, could play on the upside for it for now with like a stock trade, you know, buy some stock, set the stop at today's low and see how it goes. Tomorrow might be a little bit better setup for a potential options trade for a leveraged upside. You know, it could be similar to RGTI, where Rigetti had the spike, the pullback, and then started to go again. Ultimately, a lot of these kind of crazy parabolic type moves, the market starts to get a little bit more aware of it and the allocations into it. So I want to keep that in mind for the longer haul on it. It's a short-term trading opportunity, more of a day trade or a couple of day holding period, unless it starts to get some fundamental news or some sort of investment flow that gets announced, you know, some big activist getting involved, et cetera, et cetera. I don't want to end up caught into it and thinking it's like QuantumScape, where it started looking like it may go parabolic and then faded back down to the lows and everybody started forgetting about it again. So for me, it's just, you know, if go in that direction, I think stock trade, set a stop and then see how it goes from there. And if the stop holds, great. Trailing stop, you know, continually raising up the stop until the party is over, which may be today, it may be a month from now. I don't know until we actually fast forward in time. But bull case definitely there for the continuation trade potential as long as these recent lows hold. So like today's low, which lines up pretty well with the spike high. So clearly the market's using that 7.5 level as a support level right now. It's risking 10%. So keep that in mind as you think about sizing. If you go on the bull side, size appropriately. Sizing based upon the risk, not about the reward. All right. Let's do a couple more of the big tech names before I go into today's earnings. Alphabet had the pullback on earnings back to 190, been drifting lower. Again, waiting for a sign of the bottoming process completing. We did hit some good support levels here around 182.5. Touched it today, bounced off. Again, maybe a tomorrow trade. If we get a higher high and a higher low, start setting that up. I like NVIDIA more now than I did 25 minutes ago, as 130 really seems to be holding. Again, I could either look for a short-term anti-bearish. A 129, 127 put credit spread is 50 cents. That's a pretty good R&R for a day. It is a higher probability of getting stopped out than United or like Amazon or Wayfair right now, given the recent volatility. We could see that in a day because this is a normally about 4% mover every day. And 4% is $5. So the expected realized vol is about 4%. The realized is about 3% recently. And that can be triggered just off of almost random walk behavior, especially if tech starts to liquidate again. But overall, I think NVIDIA doesn't look too shabby. And I already touched Amazon. Let me check like Meta. Meta 700 would be my pseudo line in the sand here. 60 cents for the put credit spread for the 70, 69.5. Again, similar to NVIDIA, a little bit higher potential return, and I just have to worry about that potential liquidation. But Meta looks relatively safe. It has not been able to pull back much at all. It only, I think, gets concerning if Qs get down to that down 1.5% level, and then I start worrying about a potential Meta put credit spread. And above 7.25, I would normally look for the bull case. But this is an expensive options trade for going out to March because it's a $700 stock. So we're looking at $2,700 to get into a 720 call, and it'd be closer to $3,000 for an outright. I prefer to buy an outright call, but it is a portfolio specific situation where generally need a larger portfolio. Otherwise, I'm basically in one trade. If I'm trading like a $5,000 account, putting $3,000 into Meta options is a high risk. I'm risking 60% of my account if it doesn't break out and tech doesn't continue to recover here. So keep that in mind. Depending upon account sizing, it may be untouchable for a lot of people, and that's okay because then you can focus on some of the other names. Gilead followed through, so it went to 100, and now putting here, so 100 pin. No longer looks particularly great. The call fly is going to be trading around 20 cents. So now that's not anything 16.5. So that bounced back. Let's do SMCI. We're not really close to the open interest vibes in play if the market stays bullish. But all in all, these earnings names are not using the target point of the high open interest holidays. Makes me a little bit leery of the afternoon ones, but I got to check them anyway. See if maybe something looks higher probability. I mean, these are normally, the double fly might only work out 1 in 4 times. So there's a pretty strong probability of 3 missing. It's about a coin flip for 3, all 3 missing the target prices versus 1 hitting it. So in this case, we've got the coin flip coming up tails right now, not heads. So let's look at Hood. About 7%, currently pricing in 10%. Blah. I mean, that's like 60 and 50. 60 is the open interest. Downside, very spread. Looks to me like 60 is the big part of the play, is the bull case, normal sized move. Maybe just doing maybe only doing the call side of the play. Sticking small with it, like 58, 60, 62 call fly. It's a cheap flyer, and if we come out bullish, as the market is predicting, there's a shot at hitting there. Reddit's been generally strong into earnings here. Normally a who knows move. We've only had 3 earnings so far since it went public. So that's a hard one to predict. And given that, I think it's just a pass. APP, app loving, going to be a similar type of problem where we don't have a ton of announcements and we've had very wild moves. 15%, 45%, 25%. I mean, if it moves 25%, the average move over the last 2 years, it's close to $100. Do I want to bet on 280 or 480? Probably not. I think this is a better stock to let the earnings announcement come out. I mean, it's a $68 straddle that might be too high and might be too low. You know, we may get that 2 or 3% kind of move. We may see a 25% move. We may see a 45% move. I think it's an interesting one to watch, but not necessarily to trade. I wouldn't necessarily look to have anything on for AppLovin coming into earnings today. The trade desk has been around for a little longer, and it's been a pretty good volatile mover, about 10% on average, but we normally don't hit 10%. So we have 5% moves and we have 15% moves. So it's all about what seems like the rational play here. For the 5% move, we're looking at hitting the previous high of this, range for the year and the low window. If I'm worried about the 15% move, now I'm starting to talk about, call it $20. And I'm looking at the all-time high or back to $100 a share, about the 6-month low. Options wise, it's getting more open interest. The 135s certainly have some OI here. For the normal sized move around 10%, we'd be looking at 130. We just haven't hit that, just haven't hit right on it very often. Again, I think it's more of a name to watch and not necessarily to trade off of. Cisco, though, has been a little bit old with it, with the range of moves. 3-ish% has been the norm, unless we get the outlier 2 standard deviation or even 3 standard deviation move. So if I'm looking for kind of the normal move, we're looking at right at the previous high or down to 59. So it's a pretty good support level with about a $2 move. Pretty good resistance level with about a $2 move. And I think it sets up interestingly for a potential iron condor, given that, like selling a 65, 66 call spread for 17 cents, selling a 58, 57 put spread for 17 cents, call it 34 cents, about a third of the max value to stay within a 5% range of current stocks. All right, so for Cisco, I think Iron Condor, that's going to be maybe the best for this afternoon for a stock that, we'll call it the cat walking across the keyboard, but it's really me. Anyway, I hit the button by accident there. So Cisco looks interesting. The rest, a little bit less so. Datadog, tomorrow morning. Average has been 10%, but it's similar to some of these other names where we often get 5% and sometimes we get 20%. So for those looking for cloud to get a big move, we're kind of looking back again at that previous high as a potential target around 165, 125 on the downside puts us right back to the consolidation. Open interest seemingly biggest at 160. In my opinion, 7 for some reason has been building some open interest. In February, it's 150. So, I think another pass. Crocs. Maybe they've got something better here. I hate trading these names off the highs and off the lows, but 10% puts me down to 80 or back up to 96-ish range. 80, no open interest. Nope, pass. Maybe CyberArk. People like the idea of cybersecurity going into the DeepSeek news, or coming off the DeepSeek news. 7%, pretty good. That puts me right at $400. I like that number. It's round. Even numbers like to be target prices on the upside. Downside, 350 to 355 range. Good. We don't have weeklies. But 350 and 400 would be potential target zones. It's not the most liquid in the options, but 350 and 400 look like they could be possibilities there. Let me move away from earnings. I think Cisco's probably the best earnings trade out there right now, and the others may hit, but I just don't see the high probability there. Marriott, a little bit weak on earnings. Finding support here. I think the real support's another $10 lower, but for the bull, I think we're looking for a reversal tomorrow. I want to see a higher high and a higher low again to then start thinking about a retest of $300 a share. The poor earnings put me a little bit at unease here. I think if I'm looking bullish, I'm more likely to look for a put credit spread. It's not there this week. Maybe it starts to tighten up and give me some premium next week, but Marriott for now is not setting up for anything particularly interesting overall, in my view. Maybe on a bull flag, higher high and higher low start to get back towards 300, and I can play for like a short-term 2 to 3 week call spread, like a 290, 300. It's not a huge one, but it could be an interesting play, like a March 7th, 290, 300. For $3.50 at that point. Right now it's about 315, 330 range. 3.5 after a higher high and higher low tomorrow. I'm looking to potentially double the money when the momentum shifts, and it's not clear yet. AMD has been a bit of a disaster. If tech gets weak, I look for AMD to break support and get into that how low can we go mode. I don't like buying into this negative scenario when we're so close to the lows, year lows, approaching some of the range, I guess, from September of 2023. I don't see that necessarily providing major support of any major level there. So I think this is a stock that if semiconductors, tech and semiconductors in particular, continue to weaken instead of bouncing back, I look at AMD on the bear side. For the bull side or the anti-bearish side, I'd rather play with a bigger name like NVIDIA that's been bullish and feels safer. AMD, if it starts getting above the 20-day moving average and holding and getting some follow through to maybe test the 50-day moving average, then I can start thinking about this falling knife being lifted back up. But for now, it's just been a grind lower that has an outside chance of becoming a liquidation lower if semiconductors start to get hit more aggressively. So AMD for me is a stay away and look bearish in a bear case for the market. But I look anti-bearish for my semiconductors in something more like NVIDIA. Even Micron, for a weaker name, we've got a little bit more firm support here at 87.5. We've retested. That could be a better implementation of the anti-bearish trade on a semiconductor near the lows than AMD to me. All right. So I don't know that I can do the AMD trade for now. I know not necessarily the, if you were bullish, I think we'll still like NVIDIA more, right? And we have a lot more support levels, a lot more buyers below. when you get these announcements like DeepSeek or tariffs, people still tend to pick up the phone, call their broker, and say, I want to buy more NVIDIA. It's just a great company. So right or wrong, there is still much more interest in NVIDIA, exciting for people on the broad spectrum. So yeah. And that, yeah, thank you for noting that, Brad. I think that it's up to 60 something cents now. I'm thinking that might be, that and United Airlines look like my potential trades for right now that I'll look at in about like an hour once I see if QQQ holds back up, because now it's drifting back down towards down 1%. Back down. I want to see this really start to get some solid footing, and it looked like it in the first 15 minutes, but right now maybe the market's behaving in this was just a bounce, now I got to sell. But if we continue to hold some of these like 523 type levels in QQQ and we start drifting back towards 525, I get a lot more confidence in the dip buyer showing up again. Yeah, and Amazon, yeah, so the same thing, right? As long as tech finds its footing, the market finds its footing, Amazon, United, NVIDIA all look pretty good. I think United just has the safest general look, and now it's getting bought up more. All right, now I may have to go to Delta. After all, premium still in that? Not for this week. 15 cents. That's dead now. 15 cents now. It's kind of dead now. Well, all right, I got to be a little riskier and probably focus on NVIDIA. So that's where we're at, I think, is NVIDIA might be the play du jour as long as tech finds its footing. Wayfair again. Let me review this one more time here. Yeah, I mean, just holding in as opposed to completely reversing makes this a little bit easier. 35 cents, so sort of a little bit lower leverage, but a little bit higher probability of success with the 42.40 put credit spread. 35-ish cents still. So Wayfair, Amazon, NVIDIA, a little bit risky. That's why I want to see tech get that footing. But if tech holds up, I like those as plays. We could also look at like some of the financials. JP Morgan retesting the highs here, for more of a paid trade. Citigroup lagging a little bit, but for the paid style, it's it's like a March 80 call. But if like JP Morgan, Morgan Stanley, XLF generally look good, I could even just do a very short-term 78, 9, 80 put credit spread for 30 cents. I'm risking 70 to make, call it 27. I'd close it out around 97, 90, probably 97 cents if it's a call debit spread, buyback the put credit spread for 3 cents. As long as this stuff looks like it's holding and financials aren't going to go into liquidation mode either. So, XLF support level looks like 51 to me. It's right there as well. 51.50 put credit spread, 17 cents. So I get a little bit more leverage by going into Citigroup. Morgan Stanley down a little bit here still. 135-ish. 135, 133 there for 45 cents. These are little ways to try to trade off of a bottom forming after today's dip. So they're starting to line up. Let's let the technicals go through the bottoming process, but I think we may be showing some good signs of a bottoming process going into effect for the market after the open low bounce back. Now look for a put credit spread. And I guess it's not going to be in an airline because the airlines just started to bounce so aggressively off of it. The NVIDIA name, NVIDIA, 131. can go to the 5-minute chart, like you said. We're close here at NVIDIA. This, I'm going to give it till 11 Eastern, so I'm going to give it 45 more minutes. If we go up to 132.5, I probably missed my window. I made only 7 put credit spread, but 55 cents right now looks decent. That means, no new lows today. So if the market starts to pull back off, I have to take my quick loss. We do still have PPI tomorrow. So we had CPI today, PPI tomorrow. Got to be a little bit leery of that, but we are certainly not in just sell the market mode as AI, PLTR is okay. AI was hit pretty hard yesterday. Looks like a 30 support level. It's not quite enough there to do anything with the put credit spread, only a dime for the 30.29. So kind of a waste, only 10% return, if that. Yeah, probably NVIDIA a better one there. BSX holding here, still okay. If the market recovers, I expect this to end up on the day. If the market goes into liquidation, we may see a little bit of risk off, but for now, it still seems okay. A little worse than yesterday, but not terrible. And then Royal Caribbean, slightly weak today, but showing some bounce back after touching the 20-day moving average. So again, kind of a watch today. Any of these behave pretty well. So, just trying to find the names that have enough return to justify either a new long or just the pure anti-bearish. And I think the starting point for today is anti-bearish more so than bullish. And it can switch to bullish if we get green on the day. So if Qs recover the rest of that 0.5% loss now, and we end up back towards 528, I think the bull grabs firm control of this market. SPY needs to get back to 605 for that scenario. So initial reaction, again, anti-bearish for now. NVIDIA, Amazon, Wayfair, not the Jets anymore. Handful of other names out there, more on the tech space than anything, it seems. And then the bull case that comes into play, financials maybe on the anti-bearish as well, because they've gotten a little pullback for a leading, general leading sector. KRE, kind of just chilling in the same spot. Unfortunately looking, fortunately and unfortunately, right? We've got some stability here for the market, but stability, the way to play stability is to not play for leveraged upside return until the market gives us the technical signal that, we are a go to buy. And if we can't sell off on seemingly bearish inflation data, maybe the market was fully prepared for these kind of scenarios. And I do go back to AT&T for the bullish case here. New highs. Like I said, March 26 calls. They're actually up a little bit in implied vol today, now up to 27 to 28. Implied vol up about 0.25%. I don't know why that's still showing the March 26 calls there instead of all strikes. Reloading the page. It didn't even clear the filter for me. Great. Changed one of the parameters here to my symbol. There used to be a little X here that I could click so that I could clear out the filter. Not showing anymore, but in any case, I still like AT&T upside about as much as anything, especially for an aggressive power trader name. All right. Any other names that you guys are looking at for this morning? I should note KHC was earnings this morning. They got hit, 3.5%, but bounced right back into a nice bounce back for them. Now a normal size move. I don't know that there's a trade there though. Zillow is our biggest down mover right now. So they had earnings, got hit pretty hard down to $76. A little bit bigger than the normal size move. Not as crazy as August or November of 24. And I don't see much to trade off of in this one right now, but just should note that it got hit pretty good here. So you're having issues with Schwab T options. I'm having issues with live vol T options. Yeah. So they're trying to tell us the system beat me on that. I'll probably stick with AT&T, and honestly, I think I'm going to stick with NVIDIA personally. Try to make a quick 48 hours, make $50. Make put credit spread, i.e., buying the call debit spread for $1.50, selling it out for $1.95. That's 30% in 48 hours. That's nothing to sneeze at for a Wednesday execution. Usually, I like to do these weekly options on like a Tuesday morning. So taking away a day of risk and taking away the CPI number gives me a little bit of confidence here for that trade. Yeah, 27.28 is the value on the AT&T. So they're up a little bit. They were 26 at 27 yesterday with prices here. So they're up a penny. Kind of insignificant, but at the same point, it is 4%. So just trying to make sure for good execution, saving that, saving a buck here and there, a penny here and there on a call, it adds up over the course of the year. So ideally, you'd see the VIX start to fall, pull that back, and then maybe see AT&T option premium fall. I mean, we're seeing the VIX right back to levels from yesterday. SQDX down a little bit today as people look like they may be starting to sell those put spreads. Buying put spreads. So people may be buying back in some put spreads after the dip. Buy the put, maybe buying some stock with it. But overall, it's another choppy, kind of looking like it may be another boring day of nothing crazy happening. Q's now up to 526.5. People are buying tech here. All right, so buy the dip, apparently, right? Heck, I did. Bitcoin, risk on. Reaction after the market opened. So we drifted lower, bouncing back up here. Trading on session highs for Bitcoin. What's MSTR look like? Is there enough premium? I mean, it's a bit, it can be a wild one. Yeah, not enough premium in like down to 300. Collecting only a quarter for that or 30 cents for that. A little risky for my taste. And I don't want to go to 307.5. I think it's too high up. You can go back to Tesla again. Yeah. Still showing some signs of bottoming action here, but I think I need more time to gain confidence in the bottoming action in Tesla. Yeah, NVIDIA seems to be it. I got to give it a half hour because I said I would, and I want to stick with my thought process there. But 129, 127 is it's under 50 cents now. 130, 128 is safety reasons. I want to go 129, 127. And if it goes to 134 in the next half hour, then I'll just switch back to Amazon. Oops, not AstraZeneca, Amazon. Or I may switch over to NVIDIA and then Amazon, and then maybe Wayfair here with the 42 floor would be my backup ideas if the NVIDIA premium gets too low. All right. So we shall see. And again, I mean, if I want to go for the pure upside, I actually think AT&T, cheap implied volatility. I can get leverage in a stock that normally doesn't move that much into staying safe. All right. Well, we are approaching 10:30 here, folks. If there's anything else that you guys have, last call, and if not, I'll be on for the close tomorrow. Again, I don't really see anything great for the earnings this afternoon. Maybe the Cisco Iron Condor, but that's about it. And I think just anti-bearish in NVIDIA, Amazon, some of the tech names and some of the financial names. That's about all I got for today, folks. See how it goes. All right. I'll see you guys tomorrow afternoon for the closing bell. Best of luck today. Keep watching that market. See if that support level holds of today's low, which seems increasingly likely for now. Thanks again, everybody. Chat tomorrow. And I think Vlad will be on for the close today, okay?